In market news now, Asian shares rallied as Beijing's latest move to support developers boosted the property sector, and rumors swirled that public unrest might prompt an earlier loosening in COVID-19 restrictions. The speculation was stoked by reports that Chinese health officials would hold a news conference to discuss coronavirus control measures. Meanwhile, oil extended a rebound from the lowest level in almost a year on speculation that OPEC and its allies will deepen supply cuts to respond to weakening global demand. And then we had Richmond Federal Reserve Bank President Thomas Barkin becoming the latest official to douse speculation that the U.S. Central Bank would reverse course on interest rates relatively quickly next year. That heightened tensions ahead of a speech by Fed Chair Jerome Powell tomorrow, and it's shaping up to be one of a key major messaging event as markets yearn for a pivot on policy. To unpack all of this for us, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. You're seeing these tensions in China appearing to cool as it relates to those COVID-19 protests, as well as we look forward to Fed Chair Jerome Powell's speech. How are you, assessing the global market sentiment right now?
Afternoon to you and to the viewers. Yes, markets are caught up between those kind of developments, and remember, the Chinese developments are a very positive development. Let's put it this way: any good news coming out of China is good news for the global economy, because as we have seen, and it's expected that China somehow they don't have to change the policy today, but for them to indicate from the senior official that they are continuously fine-tuning the policies when it comes to zero COVID policy, that gave markets expectation that something should happen very soon. And now, anyway, the guys have been caught up between a struggling economy and the reopening of the economy. And yes, when it comes to the Fed, I think the biggest one will be for tomorrow. So far, we just got mixed messages, but I think markets will get a better guidance and rely more on what the chair has to say tomorrow when it comes to the interest rate path going forward. Not forgetting that Friday you also have the job numbers.
Then we had African Bank release its results, and it's quite an interesting story as you look at this bank, expand its retail franchise and also go beyond retail banking.
Very interesting, and I think they had to, retailers, they continue to generate good revenue for banks, but now it's happening at a time when interest rates are going up, and we know that they're playing more of a catch-up in a way, and yes, the guys have just to revisit their criteria when it comes to the granting of loans, the provisions thereof, and apparently they are aligning that with industry practices. My concern is that they're doing that at a time when interest rates are going up, consumers are continuing to struggle, and now probably those things might end up turning into bad debts, but we hope it doesn't happen like that. But yes, that's just making a very serious inroad when it comes to the retail market. Look at the retail loan disbursements, up 87%. Look at their retail savings and investment deposit, up 15%. That's kind of impressive.
The other one that I find quite interesting is ShopRite, announcing that it's going to be opening 10 to 12 clothing stores. And I suppose that eventually will put them head to head with Pick and Pay clothing.
You know what? If you have an opportunity to diversify your revenue streams, you might as well. And we know they've been lacking from that part. So you are right, they're putting them head to head with the likes of Pick and Pay. And so far, they've been doing better than Pick and Pay when it comes to food. So we're not sure when it comes to clothing whether they will continue to do much better. But yes, I think it's for them to try to diversify their revenue streams going forward. And they've seen it has worked for the likes of Pick and Pay. Why not?
Given the comments that we've got from some of the U.S. Fed presidents dousing any market expectation of a Fed pivot, do you get the sense that the market had gotten a little bit ahead of itself?
To some extent, yes. And I think we know that the guys, though, everything will be data dependent. But I think what we know for a fact is that interest rates, even though they might reduce the aggressiveness, but they will stay at elevated levels for a longer period of time. Whether they start giving us 50 basis points or they start giving us 25 basis points, we don't expect to see them reducing interest rates anytime soon, meaning the whole of 2023, we might have to deal with those high interest rates. But yes, markets will get desperate at some point, that where are the good news, where are the catalysts? So the minute something comes up, sometimes we tend to overreact.
Speaking of 2023, have you given much thought to what would be the telltale signs of a recession in the U.S.?
Basically, if you have to look at the US, I think for me what will work is when you look at the services sector, not the manufacturing, because the US is more of a services economy compared to other economies which are more into manufacturing. If we see an uptick or a downtick on that, then that's a telling sign. And also the housing market, if we see maybe prices starting going down, then we know that that market is struggling, and probably it also going to affect the wealth when it comes to individuals. So those are the main things that I'll be looking forward to.
The oil price developments have been quite fascinating. You're looking at Brent crude now, gaining just over 3%, $86 a barrel. We still haven't received that price cap on Russian oil. Any idea on how that would reverberate across the market if they do finally agree on what the cap would be?
I think it will help to take the oil prices down, because the price cap that they're talking about now is anything between $65 and $70, even though we've not seen an agreement to that effect. So yes, that's gonna, because remember, the whole idea is to make sure that they contain the revenues that Moscow is generating from oil prices. But now remember, it's all now happening ahead of the OPEC meeting, which is happening on Sunday. And there are rumors that given that was the situation with the demand coming out of China, probably OPEC might cut output, and that will be positive for prices. And also we know that that price cap is supposed to be kicking in relation to the sanctions from the European Union on the 5th of December, which is Monday.
Well, let's leave it there, Makwe. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers, unpacking the latest global developments when it comes to the markets. Of course, we're going to be paying attention to Jerome Powell's speech, as well as tracking developments or any comments coming out of OPEC in the lead up to that all-important OPEC Plus meeting. That is it from me. I leave you in the capable hands of Nompumelelo Siziba, who'll be with you until 3 p.m. Goodbye.